The small caps are bouncing back from earlier losses, but still underperforming to start the year, with the Russell 2000 down nearly 6%. Our next guest sees a bullish setup building in those charts. Jeff Degraaf is the founder and chairman of Renaissance Macro Research. Jeff, good to see you.
You too, Mike. Thanks.
Jeff, you referred to kind of buyable weakness in the Russell 2000 this morning. What's the premise of that, and why does it seem as if this backsliding in the smaller stocks seems like it's worth trying on the long side?
Yeah, I think we can take this all the way back to the fourth quarter of last year, where we had really impressive and almost unprecedented breadth in terms of 20-day new highs and just some of these thrust indications that we saw out of the Russell 3000. So obviously the Russell 2 has to participate in that. So that helps set the stage. Then we had our trend models turn positive in December for the group, and at the same time here most recently, as we kind of got through the calendar effect of the beginning of the year, we're now oversold in our oscillator. So oversold conditions in an uptrend in our oscillator, particularly after we have this, what we call escape velocity with breadth, is usually a very, very bullish setup. So, we kind of look at this as a gift because oftentimes you'll just get a consolidation without really any type of meaningful price pullback. In this instance, we actually had a decent price pullback. And I would just add, without rambling here, I would just add that a lot of the charts that have pulled back have not structurally damaged themselves at all. They're back to their pivot points. They actually look pretty good. So it's not as if this weakness, somehow was, through this critical levels that jeopardizes the trend. It all looks very orderly to us.
Right. So, I mean, essentially, big picture, you say we're playing by bull market rules based on how the market sort of proved itself to a degree last year with those momentum and breadth signals. And what does it mean for the global markets? Because I also am interested that you felt like non-U.S. Indexes maybe look a little riper for new money.
Well, they're more oversold, so you can make that case. And you can also make the case that means they're relatively not as strong. So there's a little bit of a yin and yang there, depending on what side of the ball you're on. But all things considered, when you look at the strength of the trends globally, really with the exception of the Hang Seng, which is Hong Kong, and in China, global trends are actually in very, very good shape. I mean, the Japanese chart, which I've been in this business for more than 30 years, Japanese chart hasn't looked good in 30 years since I've been in this business. Yeah. So it now looks very, very good. So I think it's easier to make a case or to at least have the foundation for a bull market domestically when we see similar patterns and similar trends globally. And I think that's a big part that, frankly, I don't think enough people are paying attention to. They talk about the U.S. market, but they don't really look outside the U.S. And in many instances, talk about European banks or European REITs, they're actually stronger than what we have here in the States. And those usually bode well for at least a good foundation. It's not just some idiosyncratic move out of the U.S. that we're trying to keep alive and fan the flames. It really is more global in nature. So there's global heat out there, and I think that's good news for the S&P.